Good day everyone, hope you are well. Welcome back to the channel. Today's video is going to be a really short video. I'm going to show you an awesome strategy you can use to go backtest and see it for yourself, see if it works for you or not. But I'm going to show you how to do it and what to look out for. Alright, so the first thing we need to look out for, we need to wait for the impulse move. What I mean by an impulse move, it's something like this. Price moves away really quickly, like that. It's a big impulse move. Second impulse move, third impulse move. This is also a nice impulse move. This as well. So everything is nice impulse moves. So I'm waiting for impulse moves to happen. Now the next thing, we need to see if liquidity has been taken. If you don't understand this, please watch the video of liquidity. It's essentially where price has gone above. In this case we are in crash 1000, where price goes above a certain candle. If you want to say it, if you want to look at it that way, it goes up, it wicks above, so it took liquidity before the move started. So that's what I mean by liquidity needs to be taken. We need to wait for a market structure shift to happen. In this example here, that high was created, so this is the low, so price broke that low there, so that I would classify as a market structure shift. So we need to look out for market structure shifts. Enter from a valid POI, so point of interest. So we have an order block, order blocks, and fair value gaps. So I have videos on order blocks and fair value gaps. If you don't understand them, please go have a look at them as well. And then we target the next POI or liquidity. So in this case, because we waited for this big moves, there's a bunch of places where you can take your profit. Nice order block, you can take it from there. You can take your profit at this liquidity here, or you can leave it, let price run and take the liquidity there. It's all going to depend on your risk management and your personality with trading as well. Alright, so let's see how we could have gotten the trades from here going forward. Let's go. Okay, so the first thing we need to look for, and you can do this when you backtest as well. What happened here? Alright, we had a big impulse move to the downside. So let's see, why did this impulse move happen? Where did it wick to? What caused it? Alright, so let's go have a look. Price came down. Break of structure. Where we targeting on the higher time frames. Liquidity has been taken. Okay, now we're starting in downtrend. So this was the last high before that big impulse move that took this liquidity here, and we see that price reacted from that level. Alright, so remember, you're not going to enter normally just here. You need to wait to see what happens. If you want to take it a little bit further, quickly have a look. Liquidity has been taking, there's the high, liquidity has been taking, if you want to see it that way, and now we are currently in this move. So alright, so we waited for liquidity to be taken. You see how exact that literally is. Alright, so liquidity has been taken. Let's see, do we have a market structure shift? Yes, we do have one. It's this one here. Market structure shift. And then what do we have? So under higher time frames, you will see in this example we are on the 1 hour, but if you go onto the 4 hour, you'll see this will be one order block. So let's mark that one out. Just go to the 4 hour quickly so that you can see exactly. You see, there's your order block. Okay, let's go back to the 1 hour. It's a price took liquidity, came down, we're waiting for retracement. So this is going to be all on your risk management, depends on how you want to trade, but you see there's a fair value gap there as well. Let's just change the color. So we have a fair value gap, we have an order block. Now if you want to enter, for example, from this fair value gap, stops above the high, and let's say you target this level of the last level of liquidity, that would be here. Let's say that was your target. It will be a 1 till 7 risk to reward trade. That's a really good trade, especially if you are entering on the 1 hour. But for a big stop loss like this, you also need to have a little bit of a bigger account. So let's see how we can refine this. So do you see there's an order block overlapping with a fair value gap? What you can do as well, where you can enter from the 50% of the fair value gap. For example, let's just delete this quickly. You can enter from the 50%, more or less the 50% from the fair value gap. As you can see, we had a small reaction there. Let's say you entered there. Let's look at the risk to reward now. Two till 6 risk to reward, much better. Let's say you don't enter on the fair value gap and you want to only enter from order blocks. Let's just, there we go. And you only want to enter from order blocks. Then literally, let me just do that. There we go. You got a 3.2 risk to reward trade. So from a 1.7 to a 3.1 risk to reward trade, that's not bad at all. It's one of the strategies I find the most success with me. Now let's see what's happening. Okay, so price break the structure here. Let's see what's happening. We have an order block and a fair value gap there. Now you need to look at it this way. All right, we broke this low, right? Did it get broken by a big impulse move? Yes, it did. Where did this impulse move react from? This order block here. Just change the color again. Literally this order block here. All right. So this is a continuation now, because we made the liquidity sweep, we had our big move. All right, so price reacted from an order block. What do we have? We have another order block, and we have a fair value gap. So again, this is going to be all up to you, how you want to manage your risk, what type of trader you are. But let's say you entered from the fair value gap, stop loss below, above that high, and you target your first level of liquidity. Or if you look down, because we're in a down move, where must price come? There's a bunch of areas you can use as your targets. These lows you can use as targets as well, because that liquidity needs to be taken out. Let's say you just use the closest POI, that would be this liquidity here. That's a 1.5 risk to reward trade. That's not bad at all. If you'd entered from the order block, it's a trade that you missed, and that if you'd entered it, that would have been a 3.1, but we missed it. All right. Okay, price reacted from a fair value gap. We took this low out. Is there a big impulse move? Yes, there is. Let's zoom a little bit out. Let's go to the 30-minute. See if we can see something. There we go. You see there's that big impulse move. Took out this low there. What did we have? It entered from the fair value gap. Okay. You can even go low to the lower time frame. But look what happens here. Liquidity has been taken. Alright. We have a nice big impulse move. market structure happened. I'm waiting for a little bit of a bigger impulse move, the one that's going to break this one. Alright, what do we have? Let's have a look on the 30-minute. Our order block there. And we have a fair value gap there. So I'm following all my rules. Let's just delete the old ones. So if you entered from the fair value gap, stops above this high, where do we target? We're going to target our next level of liquidity or your closest POI. What I mean by that, you can target this fair value gap there, for example. As you can see, price literally went straight to our fair value gap, retraced a little bit, and then broke the low. So that's all up to you. That's a nice 2 till 7 risk to reward trade. Right, let's see what's happening here. Okay, we broke this one, broke the low. Cylinder continuing. Let's see. Okay, big impulse move. This one here. Here you go. You see this big impulse move here. What do we have? We have an order block. We have a fair value gap inside of that order block. If you'd entered your trade at the fair value gap, your first entry would have been there. Stops above the most recent high. Where do you target? The first level of liquidity. So immediately you had a really quick trade, 1 till 7 risk to reward. Let's say, cool. Now you can see prices coming back. Price is coming back. Now you can go refine this order block. What I mean by refine, if you go to the lower time frames, you will see if you mark it out there. Let's just see what happens there. Let's go to the lower time frame. See, now you refined the order block a little bit. 3 candles, consecutive candles. Okay, first trade, it retraced back. Alright, we entered from our order block. Stops above that high. Where we're going to target this trade? Level of liquidity or your next POI. What I mean by POI again, this is an order block. As you can see, you can take your target from there to there as well. That's also a 2.5 risk to reward trade. Really nice trade. Alright, so let's quickly recap. So we wait for the impulse move, see if liquidity has been taken. Yes, liquidity has been taken. Do we see a market structure shift? Yes, we do. Enter from the from a valid POI, order block, or fair value gap. So what happens now? Price is going to retrace, and then you target either a valid point, a valid POI, that would be an order block or fair value gap, or you can target next level of liquidity. So you can enter, target, or target, and then you enter there. Stops above the highs if you are in crash, stops below the lows if you are in boom, and then that's your targets. So that's how I trade boom and crash. I think this is a model that can work for everyone. Awesome. Please go like and subscribe to my channel as well. If you find the videos valuable, please leave a comment, and yes, then I'll see you guys in the next video. Cheers.